Hello, Maverick traders. Welcome to the Market Roundup. Joe with you here. It's Monday, the 14th of November. I've got my 2 cents. Just take responsibility for whatever you follow along with. Follow your plan. Let's get into a market analysis as we just came out of a pretty interesting week. And I take a look at these things over the weekend to see if I can find something technical. And we'll talk about that here in a minute. And it was interesting to see how the response to the CPI was quick and massive surge to new levels. The levels forced traders now to think about what's next. I truly think today's market action was everybody that was in, everybody that was waiting for inflation to curb is in. Now that could be a reoccurrence, meaning things will get better and better and better, or it could just be a little bit of a flash in the pan. We might see inflation move a little higher. Folks, we do have a PPI number coming out. Retail sales will be another gauge. Just because we have a little bit of a slowdown in inflation doesn't mean it's completely curbed. This is one event. But the way it was reacted to was super, super interesting. So anyways, today, Dow, S&P, and NASDAQ all lower, but slightly. A little bit of a hesitation after, once again, the NASDAQ put in over 8% in 2 trading days. Woof. Okay, big. Oil down substantially today. Gold pretty much flat. And that was in light of a crypto shake-up, if you want to call it. FTX, one of the larger ones out there, is probably not going to make it. However, I see a disconnect between the two because the first reaction was bearish, but the overall markets shook it off. And I don't know if that's going to follow suit or have any sort of impact moving forward now that the inflationary quote-unquote fears have been a little bit curbed. Not gone, but curbed. Advanced decline line, 66 to the downside, 30% to the upside. That's expected on an inside day or a little bit of a corrective action. Above, below the 50-day moving average, still looking really good. 65% above, 35% below. So even with the correction today, stocks are still showing signs of strength. The heat map, we'll take a look at that as well. Mixed, mostly bearish, but we'll go from there. So what do we got? Well, we've got this awesome move to the upside. We broke the resistance. We knew we were, and we did. We talked about this 390 level. We know that this 410 will be the next. However, a little bit of a surge, and Darren made a really good comment on this on the weekend update, is because, hey man, when you push too hard and everybody jumps in, all that energy is gone. It's expended. It's one of those things, you throw a ball up in the air, and no matter how hard you throw it, it's going to eventually get to a top or a peak, stop, and come back. So I'm going to tell you right now, I fully expect some sort of correction, either a consolidation or a pullback. That doesn't mean I'm bearish. It just means that, yeah, man, this ball was thrown really hard up into the air, and the reaction, everybody that really was looking for a slowdown in inflation before they invested, I can comfortably say at least the people that have been waiting in line for the last 3 months are in. Another thing I'll make a comment of since we're here in the SPY is we are already substantially off of our low. So anybody that was buying an inflation anticipation from this level here is the last people to the party up at this point. Now that that's out of the way, it's going to be super interesting to see what the markets do over the next subsequent days or the rest of this week. There's my opinion. That's why I have a disclaimer. The Qs still looks pretty decent. They did get their head above that resistance level, but not nearly as great as the SPY. Sorry, folks, I do not have the diamonds up. Go ahead and take a look at that because that looks like it's just gangbusters. It's taken off. But we could easily see this retrace, maybe even revisit the 270. There's my pessimistic side. If you're going to be optimistic, you want to see it stay in the area that it's at here, maybe even a retest of the 380, but definitely above that 50-day moving average. Heat map is exactly what you expect it to be on a pullback. Looks like healthcare did pretty decent when it comes to what pulled back and what didn't. Everything else, I'm not going to get into too much detail because it is pretty much a pullback after a pretty substantial CPI reaction. So where are we at? Well, I'll tell you where I'm at. I'm just going to follow my charts. I'm going -1 for the week. And the whole reason is because I just feel we're overextended. Right? That's something that says, geez, Joe, you should be +1. No, not based off of how much energy we expended Thursday into Friday, the resistance that we hit those days, I should say Friday and even today. So I expect sideways to down. I gave it a -1. We have the 2050 slope But what I will give it, and this is why my monthly outlook is definitely higher, is because the 20 has crossed above the 50, and that is definitely a bullish sign. If we pull back and we retest 390 support, I'll even give it all the way back down to that crossover on the 20 and the 50, all the way back down to 380. I'll still keep it at a plus one, maybe even a plus two at that point if it can hold those levels. So super difficult. This is not my strength, obviously. Potential trades, I've only got 3, and they're all to the bull side. To be honest, those 2 of those 3 were actually sideways, but they're showing a little bit more strength. So if I do believe in that plus one longer term, I moved them to the upside. Bear side right now, everything that you thought was horrible or that you have seen falling apart has had massive corrective bounces. The argument could be short cover rally or bottom fishing. It is very common in bear markets to see things bounce that hard. That leads me to believe that the glass could be half empty, but the majority of traders that were following that inflation level, it is definitely glass half full. Here is AKRO. I love this. Last week when we talked about it, it's confirmed pretty aggressively today to the upside, but you could still play it as a breakout above the 45 mark. That might be something kind of cool if you guys want to say, hey, I missed it here on this pullback. Look at that. Nice pullback. It confirmed above the 20-day moving average today. Even yesterday, you could have made the argument of getting into, or I should say, excuse me, Friday, of getting into it because I do like it, and it does look really bullish. Moving on to Las Vegas Sands. This was kind of a sideways up play. We were thinking it was going to stay maybe below the 43 mark, and it looks like it tested that Friday, and it looked like it almost confirmed that, but pulled back a little bit. So be patient with this. It still has the potential to be sideways if you guys want to play it that way. Let me get my pin up here. In between, see, this is the area that we were talking about, I think, sideways-wise. It was between here and here. But it did pop up through there pretty aggressively, and it did get above this peak. So if it can stay above here, I think maybe sideways to up might be a better play with Las Vegas Sands. That's if you believe that these markets are going to continue to consolidate and move higher from that inflation number. I'm putting a lot on it, and it's very difficult. We've only got 1 day since that happened. This is Mosaic. This one seemed to survive as well. I liked it. I thought it was pretty cool. This was let me check my notes here, sideways to up as well. Look at this bounce that it had a previous week or so ago. Came right back up. 20 has crossed above the 50. I would be a little bit patient with this and see if it's going to get above maybe the 54.5, 55 even. If you want to be really reserved, 56. That'll allow the markets to really consolidate over the next couple of days or show that it does have more to go to the upside and maybe erase some of the probabilities of you thinking that, okay, that was it. It was just a flash in the pan. The market's going to roll over, fall apart. Be patient. And folks, I apologize. That's why I just don't have that much. I just need to see a little bit more before I start throwing out massive trades that I can really get behind. So the market surged on the first sign of slowing inflation. Temporary monkey off the market's back. That is absolutely for sure. That reaction, I hadn't seen a reaction like that in a long, long time. Even in light of a pretty scary crypto situation that really crushed a lot of those. I thought Bitcoin was down over 13% for one of those days. So I guess there's a disconnect there. But anyways, traders are now forced to look deeper into the markets and their investments. We have the PPI on Tuesday, retail sales Wednesday. I don't put too much on the retail sales, but if we don't see a slowdown in the consumer, I don't know how prices stay low. My opinion. PPI on Tuesday. So if the production price index shows that we are still paying more for that base good to create those products, that CPI slowdown could just be temporary. That could be companies saying, hey, let's lower prices just short term to ease the consumer. Earnings reports, we got a handful there. There's nothing really big to talk about. Just make sure you follow along with whatever you're trading and double check. All right, guys, that's my 2 cents, and we'll see what happens the rest of this week. Thanks for joining me. We'll talk to you next time.